Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
And we're back here with another edition of Navigating Retirement with your resource, ladies and gentlemen, for a common sense approach to planning for your financial and retirement future. He is the founder, president at the Coastal Financial Planning Group, a resource for Charleston and Lowcountry area savers and investors, those taking your planning and your financial future seriously. Welcome back to Rick Durkee. Rick?
Hey, everybody. Welcome back to the video version here of our podcast, Coastal Financial Planning Group here in Charleston and across the World Wide Web now. We took our traditional radio program and we brought it out through video and through the thanks of Peter Rashan. And thank you, Peter, for joining us again today. And thank you to our listeners and watchers who have been faithfully following us over the years on terrestrial radio, and now we've moved to the podcast and video system. So you can get the word out more. You can share us, you can like us, you can do anything with us today to help spread the word for creating a plan which will help you go through your retirement years, which with a much higher degree of confidence that you're going to achieve your goals.
Yep. And if you are only listening, understand that there is a video component to the podcast. You can find that on the website at cfpgroup.biz or on YouTube, searching the Coastal Financial Planning Group. And if you're watching and would prefer to listen, maybe to the next episode in your car as you're traveling somewhere, there is an audio component to the program too, and you can find that on all of your favorite podcast outlets. Again, at the website, it's your best central resource for all the information, cfpgroup.biz. Make sure to like, subscribe, hit the bell so that you're notified of future editions of the program. But Rick Durkee has been here in Charleston, serving Lowcountry area savers and investors for going on 20 years on the radio, giving great advice, now on podcast. And Rick, in the most recent several editions of the program, you've been talking since so many of us had that unpredictable event. We saw losses in our portfolios. We never like to see that. We've almost been trained that if we are going to invest our money, there's no way to know or predict what the outcome is going to be. You know, we hope for the best. We say, hey, historically, it's done well, and there have been gains and growth on our invested dollars, but there is no guarantee of future results, has always been kind of the disclaimer when making any kind of investments. You have been talking about a different approach and a different style and a different process. You've termed it defined outcome investing. And we wanted to talk about this because the concept is a novel concept. The fact that if we invest our dollars, we can actually determine and find and know what our outcome is going to be. Now, this was not something that has always been available to the average investor.
No, it hasn't been, Peter. And, applicably, there's probably a couple good reasons for that. Number one, the past investor models would only offer this to an institutional investor. And you'd need to be an accredited investor to do that. You'd need to have at least $1 million to purchase a structured note. And in many cases, we're talking about multi-millions of dollars that would invest into these structured notes. So you had institutional companies, insurance companies and whatnot investing into these managed products, and they weren't available to the retail investor. Now, there was the second reason that these weren't made available to the traditional investor was that simply they weren't offered through the distribution channels that the retail investor has made available to them. You basically look at broker-dealer models, that give investment advice, and then you have registered investment advisory platforms that also give investment advice. And the registered investment advisory platforms now have developed relationships with the institutional managers and the banking institutions that create these structured notes. And now they're able to offer them in smaller minimums to retail investors through their platforms. And at the Coastal Financial Planning Group, we represent a company called Fusion Capital Management, and we are investment advisor representatives for them. So we're able to offer the structured note, which offers us a process to define our outcome in investing through the channel of Fusion Capital Management. And that just hasn't been a prevalent option for the retail investor to do this up until now, when the retail investor threw their hands up again and said, man, I'm pulling my hair out. It's long. It's long. I haven't gotten a haircut and I'm pulling it out because I just got my statement again. And wow, I saw my investments take another hit.
Well, Rick, I mean, we've almost become accustomed to it at this point in time. I mean, 3 major downturns in the last 20 years, and not momentary downturns. These were prolonged downturns. They call the period from 2000 to 2010 or 11 the lost decade, because 2 major downturns, and then we make progress. Fantastic, we're doing great. And then all of a sudden, coronavirus hits, and there's another major downturn. So the natural question I think listeners, viewers may be asking themselves by now is how do structured notes actually create this defined outcome? How can we have a defined outcome using these tools that may not have been available before?
Yeah. Now, before I get into this, Peter, these are some details that can be somewhat confusing without something to look at to be able to see the details of this. I encourage you to call us today, 800-491-6220. Get a copy of my white paper on structured notes and defined outcome investing. But secondly, structured notes really have 4 pretty straightforward parameters if we boil it down to the brass tacks here and the basics of the structured note. First of all, it's the rate, and this is the amount the investor receives during the term of the structured note or at maturity of the contract. So the rate is the first important parameter of the structured note. It could be an interest rate that you receive. It could be a coupon. So there's different rates that are offered depending on the terms. And the terms is the second important parameter that we look at here. The terms can range anywhere in the previous institutional models from as short as 6 months to 20 years. At the Coastal Financial Planning Group, because our clients and prospective clients have defined benefits that they would like to receive from their income plans, now they need to structure those notes in a term of maybe 3 to 5 years. Okay, that's more applicable to a retiree or a post-retiree investor, or perhaps a growth-oriented investor, as we talked about in our last edition of Navigating Retirement and the Structured Note. Typically, there's 2 types of investors for the Structured Note. One is growth-oriented, one is income-oriented.
And Rick, each one of those you've also talked about, and I think we are going to be talking about very soon here again, the 3 different types of market environments. Those different types of investors would have different goals depending on whether the market environment is moving up, moving down, or moving sideways.
Yeah, that's right. So this is all part of a coordinated process. We have been successfully creating income plans for our retirees for about 17 years now at the Coastal Financial Planning Group. I've been in the industry, the financial services industry, for almost 25 years now. And my challenge is always to say, okay, how can we look at current situations, and how can I still give my clients or prospective clients that high probability for success that they're looking for in their retirement income planning? So, going back to these structured notes and these 4 straightforward parameters that is available in our white paper, okay, terms typically range from about 2 to 5 years of the structured note. Next, asset allocation is the third basic straightforward parameter of the structured note. Structured notes contain both fixed bond components as well as derivative and options components that are typically tied to an index or indexes such as the Dow Jones Industrial Average, the Russell 2000, or the different types of Russell indexes, or just the standard S&P 500 index. And so, as we look at it from a standpoint of, investment and allocation modeling, typically using these type of indexes will build diversification into the structured note. So it's available internally inside of the structured note. So that's the third parameter in the structured note. And the fourth is pretty important. It is protection. Now, protection has always been one of our main goals at the Coastal Financial Planning Group, because we do and we are ISO certified, and ISO requires that we look and evaluate risks, issues, and opportunities for our clients. And so the structured note was the opportunity that came from the risk and the issue of the last three market downturns, as you mentioned, Peter, and people saying, I don't know, I don't have any idea what kind of investment returns I'm going to get on my investment, because I don't know when the next curveball is going to be thrown to me. So we wanted to have these defined outcomes. Protection is the amount of safety that the investor wants or desires to receive against losses. It's often said, Peter, that risk and reward are traveling companions. So if you're risk averse, you definitely want to reduce the drawdown in your investments or the potential for loss, okay? And when you do that, if risk and reward are traveling companions, you give up some of the upside in your investments. But you do that with safety and peace of mind, knowing that you have protection built into the structured note. So it's a very detailed process in evaluation of what type of structured note is going to fit best into someone's retirement income plan. But protection is typically the primary reason that investment minded retirement planning investors want to add more protection into the structured note than people that are more interested in growth for their investments, like younger people or perhaps people that are planning on passing on a financial legacy to their heirs.
Well, Rick, I guess the issue for me, or most investors, I believe, has always been that we can look back in history very easily and say, oh, well, for the last 5 years, for the last 10 years, we've been in an upward moving market. And therefore, here have been my results to this point. Or for the last 4 months, we've been in a sharply downward moving market. And therefore, here are now my results from that.
Yeah.
The problem is that looking forward, we've never known what the market environment is going to look like into the future. And there has not really been a way to determine or define, if we are going to have investment dollars or the opportunity for growth, what our outcome is going to be, because we don't know that direction of the market. These structured notes offer us some mechanisms on either side of that help us to narrow the range, or in some cases precisely define what that outcome is going to be. And I think that's going to be attractive for a lot of investors.
Yeah, it is. And basically the words that we use to define those parameters are buffers on the downside, okay, and barriers on the upside. And so setting up these structured notes to fit within those guidelines help us to define what the outcome for our results of what we'll get in our investments are. And this has been done for years on the institutional side, Peter, and it's because managers had to invest large sums of money, trillions of dollars, in pension funds and things like that. And they had to make sure that these pension funds lasted as long as their last pensioner lived. And so this is now being made available to the retail investor. We talked today about these 4 parameters, these structured note parameters. They're straightforward, but you probably didn't get enough details right now. So I'm going to encourage you to call us today at 800-491-6220. Request a copy of our white paper on structured note investing and having a defined process of what your outcome will be in your investing. And also text me if you're driving and you're on your smartphone right now and you just want to text Rick D verbally into your smartphone. Rick D, text Rick D, my first name Rick, and then D for Durkee, text Rick D to 555-888. We'll get you some information going right away. And then, of course, you can always visit the website and join us there.
All one word, no space, by the way. Rick D, all one word, no space, RICKD to 555-888, or on the website, cfpgroup.biz, or give a call, 800-491-6220, 800-491-6220, 800-491-6220. Bottom line, ladies and gentlemen, there is a way to better determine your financial outcome. If you're at all interested, I highly encourage you to give a call and find out about these tools that are available, about these strategies that can help you define your goals, and then have your money work to help you achieve them and determine that outcome. Pick up the phone, give Rick Durkee and the Coastal Financial Planning Group a call, 800-491-6220. Request the white paper on defined outcome investing and how you can achieve those goals that you determine and define. 800-491-6220. We'll talk to you again real soon here on Navigating Retirement. Rick, we always appreciate your time.
Thank you, Peter, and thank you to our listeners. Talk to you again next week. I've got a little bit more to tell you about defined outcome investing.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.